Order, please. This regular meeting of the Joshua Basin Water District Board of Directors for November the 20th is now in session at 5:32. Please join me in the Pledge of Allegiance. The flag is. I
pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all.
Thank you very much. Determination of a quorum, General Manager Johnson, a roll call, please.
President Flowin,
Present.
Vice President Doodle.
Here.
Director Fick.
Here.
Director Charlesberg.
Here.
Director Short.
Here. Thank you very much. All directors are present. We have a quorum. Have there been any requests or comments from I'm watching on here, sorry.
Public.
Approval of the agenda.
Too eager to.
Agenda.
Yes. Okay, let's do the agenda. Is there a motion to approve this evening's agenda? Is
So moved.
there a second?
I'll second.
All in favor?
Aye.
Aye.
Motion approved. Public comment, this time is designated time is for members of the public to provide comments on any district related matter, whether appearing on the agenda. Under provisions of the Brown Act, the board is prohibited from taking action on items not listed on the agenda. At the discretion of the board president, comments on a particular agendized item may be deferred until that item is heard. Does anyone have a public comment? Hearing none. Here we go. This is what I was looking for. General Manager Johnson, is there written or electronic voicemail public comments?
None to my knowledge.
Something on the screen.
Comment?
Is that Robert? Was that Robert?
There was a noise from there, but
Robert or Phil, is there public comment?
Hearing none.
Yeah.
Public comment time is now closed. Consent calendar. Consent calendar items are expected to be routine and non-controversial to be acted upon by the board at one time without discussion. If a board member would like an item handled separately, it will be removed from the consent calendar agenda for separate action. We have 3 items. On the consent calendar, the draft minutes board meeting, October, draft minutes board meeting, November 6th, and the check register for September. Does anyone wish to remove an item from the consent calendar for discussion?
not me. I think we have enough financial stuff to talk about.
Is there a motion to approve the consent calendar? I'll make the motion.
Second.
Thank you very much. All those in favor, say aye.
Aye.
Carried. Discussions and action calendar, the 23-24 audited financial statements. Ann Roman, Director of Finance, with introductions, please.
All right, thank you. Good evening. We're getting right to the audit. So today we do have the 2023-24 audited financial statements for presentation. They delivered positive results with no audit findings and minimal adjustments this year. And we do have a special guest, Jonathan Abadesco from CJ Brown and Company with us tonight to help present. I just want to mention a few things before I turn it over to him. The Finance Committee did review the statements on the 13th of this month. And as I said earlier, this year's audit results are positive. No audit findings, one adjusting journal entry, which was anticipated. And still a unmodified opinion. That's that fancy language that auditors like to use, which means that the auditor has confidence that the statements present fairly in all material respects the respective financial position of the district. Net position increased by 8.29% or $3.8 million approximately. And that increase is one sign that because our net position is improving, that our financial health is improving. Additional information, net pension liability. Wanted to just mention that quickly. That did increase slightly, about 176,000, I believe it was. But I did want to remind the board that we are making additional discretionary payments annually to help mitigate that increase. And the management report is included in your packet as well, and that will show you that there are no findings or recommendations. Also, it does show you the disclosure of any adjusting entries. And the one that you will see there is a GASB 68 pension liability entry that we have depended on our auditor to help us with. So that is anticipated. And finally, before I turn this over to Jonathan, I just wanted to say that I owe so much credit to the finance department for so much hard work during audit season. We work on this about 10 months, 9 or 10 months out of the year. But, just by the fact that out of hundreds or thousands really of transactions, we have very little to pick on there. And so tremendous credit goes out to finance and to all the other staff that assist also with the audit each year. And with that, I will turn this over to Jonathan Abadesco from CJ Brown and Company. And we have a presentation for him. So let me share my screen and we'll get right to that. The right button. Why is the button always hiding? There we go.
Good evening to everybody. I'm very happy to be here. I'm COVID-free today. So that's a good news. So to start with, so as you can see on your screen, professional guidance that we follow. So our audit process is governed by auditing standards set by AICPA and federal and state requirements. So, and federal and state requirements that we follow when, for example, when the district receive grants or local grants, we follow those rules when we audit those grants. Accepted accounting principles that we follow is the statements issued by GASB or Governmental Accounting Standards Board. Sure. So the audit process that we have are divided into two phases. The first part of it is the interim field work, where we try to understand your controls. So the way you process your cash receipts from the time that you issue your bills to customers up to the time that you receive the monies from customers. Same thing with vendor payments from the time that you receive the invoice from vendors. We match it with PO or purchase order if it's applicable. And from the time that it was paid or when the checks was issued from your accounting system, we do check those as well. The next phase of our field work is the final field work, where we obtain the trial balance from Anne and her team. We audit all your accounts from assets down the line to revenues. And also, we do consider the risk of fraud when we audit every district that we audit. So with that in mind, when we audit documents that was presented to us, we just don't file those. we make sure that we match those with your numbers. And we also perform an interview of one of your board members and key management of the district. Okay, so audit requirements. State law requires every governmental agencies to be audited by a qualified CPA. And your financial statements, once it's issued, will be submitted to the State Auditor's Control's Office by January 31st. Your report, once it's issued, will be presented to the following agencies listed. It will be submitted to the San Bernardino County, LAFCO, Mojave Water Agency, US Bank, USDA, your bondholders, Dun & Bradstreet, Board of Directors, and your report will be posted on your website. Yes, and as mentioned a while ago, we have this fancy term, the unmodified opinion. That means that your financial statements is in accordance with accepted accounting principles issued in the United States. And it's a clean opinion. So no issues whatsoever. Okay, so management report, you have that in your board packet. So it clearly states that we don't have any disagreements with management. No consultation was done with outside CPAs. And the next page, will show you that
Oh, it's you.
sorry, like an automatic the management report in your board packet shows that we don't have any material weakness that we saw in your audit. So just want to commend the management from Sarah and management team for doing a great job and the audit. So on page 34 of your board packet, you could very well see that there's a table that shows you the net position of the district. The bottom right portion, there was an increase in your net position of $3.9 million, which I will explain in the next slide. Yes, so in the next slide, this is your revenue statement where it shows that on page 35. The reason for the $3.9 million increase was you have more revenues compared to expenses, which is your change in net position on the third to the last line item. And your total revenues, it shows that you have an increase of $1.5 million, which can be attributed to an increase in your water sales. During the year, where more units were sold compared to the prior year. And you have a scheduled rate increase, which includes basic fees of $141,000 increase. Also contributing to this 1.5 million increase was your non-operating revenues increasing by $750,000 in change due to the fact that you have a good year of investment return of $600,000 and property tax increase from the county of San Bernardino of $150,000. And lastly, your expenses, there was an increase of $140,000 due to increase in your pumping production, treatment, and vacant position filled during the year. Okay. So any questions that the board and public members may have?
Proceed, please.
Okay, any question? So this is your summary. Okay, so the summary, I just want to again reiterate. So we have issued an unmodified or clean opinion. On that position, it increased by $3.9 million. Total revenues, it increased by $1.5 million, and your expenses, it increased by $140,000. Any questions so far?
Sounds good.
We're gonna have a sort of a roll call of questioners a little bit later on too. But yeah, also anything from any of our observers, if anyone has a comment.
Is this the end of the presentation?
Yes.
Oh, okay. Yeah, I have a question. Maybe. Okay,
Absolutely.
thank you. I was lucky enough to attend this in the committee meeting for finance, and before I ask my question, I just want to say, wonderful that we have this high quality professional work that's being recognized by our auditors, and so pleased to see Anne, Sarah, and staff to have this recognition of an unmodified clean review. Seems like you guys should be wearing all white or something. But I think that this should put the public at ease regarding the fiscal health of the district. It's a shining moment. And it's just funny, this is the beginning, or this is the end of my 4th year here, and I feel like I've gone to accounting school. Because even though, I worked in corporate life, I wasn't looking at big budgets like this. And so I'm still learning. As I said in the committee meeting, I had to look up what, some of these things, what they meant. But one of them I looked up that I didn't know about, and I asked about it at the time. I just marked it on here. Let's see if I can find it. Is that same one that we talked about in the meeting? And it is, I'll tell you when I find it. I think it's on basic financial statements. Okay, it's on page 42. That's the right side.
Wait, if we're referring to a page number and you see 2 of them, say both of them.
12-42
Thank you.
or slash. Okay, so it's operating income. So I just had, when I was reviewing this before the committee meeting, I looked that up, and when that refers to a business, like a commercial business, that's actually the profit, right? Wasn't that what I read? Wasn't that this?
Yeah.
Yeah,
you mentioned
right, but we don't
profits.
call that profit, but if we, so this operating income, this number is, how is this number arrived at?
Well, this is the operating revenues less the operating expenses.
Okay.
So what is classified as operating revenues, water consumption? Oh, I'm sorry. Did Jonathan want to answer that or?
I could,
I just jumped right in.
have you first and I will.
So water consumption sales, water service charges, which is the basic fees that we charge, locked and unlocked basic fees, standby service charges, and other charges for services, which are things like the late payment fees and some of the development fees, not the capacity charges, but some of the development fees like a new meter quote fee, fire flow fee. Those things are included in the other charges for services. So that's our total operating revenue, and then less operating expenses. So expenses that apply that those revenues support. So pumping and production. So pumping, which is our production department, our distribution department, they do the treatment and transmission and distribution, customer service department, and then we've lumped together general and administrative, which is finance and general administrative. So our admin department and our HR, human resources department. So those are items that apply directly to those operating revenues. And so that's then the the depreciation is actually reduced from that as well. So depreciation is a book figure, and that is reduced from that operating revenue as well to come up with that operating income. I don't know if you want to add to that.
So I will just, summarize what Anne was mentioning. So to arrive at the change in net position of $3.9 million. So on the operating revenue, that's the revenue that you generated from providing service to your customers. And that should be deducted by the operating expenses, which is the cost of providing service to your customers, right? And less depreciation expense, which is a non-cash expense. And when you see here the non-operating revenues and expense, those are the support costs or support costs / revenues. When I say support costs / revenue, so support revenue, when you receive property taxes from the county, those are like support revenues to augment or to support your duty to provide service to your customers. And capital contributions here shows you that you received some grants from Mojave Water Agency, and any capacity charges of installing water to the future or future customers.
Yeah.
Hopefully I explained it.
Well, I mean, you went a little further, but, just because I come from more of a commercial background, I would just want to know, is this operating income, is that kind of what we cleared after everything? I mean, is that that number, is that what that is?
It's not the final number.
Okay.
Because we still have to apply the non-operating revenue and
Yes.
non-operating expenses after that.
Okay,
And in our case, that improves that number. So after we apply those items, we end up with the 3.866
Okay.
million.
Yes.
And that's because we've now added in property taxes and our investment returns, and, some miscellaneous expenses in there. But the water capacity charges are also a big part of that, and those are restricted. So these numbers here, the change in net position is not all liquid. It's not all cash by any means.
Yes.
So, and that's split out in, I think on page, it's on another page, right, Jonathan? Somewhere there where it splits out what's restricted and unrestricted of that position, because some of that is also is invested in assets and whatnot.
well, so I just have this question. So if I wanted to know what JBWD cleared for this audit, what would that number,
It's
where's,
the 3.866.
that's what we cleared, that change in net position?
Yes.
Yeah, we say cleared is that the income.
Yeah, instead of what we netted, what we cleared after we paid everything off, what was the final number? That's the,
Yeah.
okay,
I think that's what you're going
Yes.
for. Is
Okay.
3.86.
okay, all right, okay, thank you, that's all for me.
I was gonna call you lieutenant.
Yes, sir.
Carlsberg.
I'm just wondering if the initial question that, Director Doolittle had was, up in the middle of the page, the operating income, that's not profit. But because that probably goes back into, maybe our reserves or, and also it's unrestricted, as the other monies that you mentioned down below are restricted, are actually designated to specific
Yeah,
items?
it all goes into one pot, basically where we have to then set aside the restricted items and the designated items that are in our reserves. So we have the water capacity and wastewater capacity, which are restricted. We have other reserves like the equipment and technology and the meter replacement reserve that are just designated. But all those funds, any excess funds after expenses go into that reserve and go into those sub or, virtual, what I call virtual accounts.
So they're available for future charges eventually, but they're resting there while they're waiting to be used.
Yes, yes.
And so it's not really profit in the sense that she's trying to, make the point. It's not profit. It's really it's income that's sitting there waiting to be used.
Used for future purposes.
Yeah.
So when you do use something, say from capacity, to pay, for a saddleback or some such thing, is that then revenue? When it comes out of the restricted capacity reserve to pay for something from saddleback, say, that project, is it
No.
revenue then?
No, it's not revenue because it's already in savings. It's set aside in savings at that point. It's not revenue again. It was a revenue when it came through the first time. When we utilize that savings out of the reserve, it's not considered or treated as revenue. Again, if that's how I understood the question, I'm not sure.
Yeah, I
That's
just.
what you're getting at?
realize that. So if then you use it, that's an expense then? To pay for something?
No, it's a cash, it's use of cash. It's not a revenue or an expense at that time. Does that make sense to
Yes,
you?
yes.
Okay. Just double checking with the expert.
So just to pursue this, I'll come back to you. So if somebody's gonna build something and they need a temporary meter or require some other kinds of deposit for their project, is that considered a revenue then?
So yes, when we collect from the customer, that's a revenue.
And so when you pay him back after the project is completed, is it then an expense?
Okay, so yes, so that is, those are a little, it depends on the type of project, but a lot of times what we're doing is taking a deposit up front. That we're talking about a development project, I think. We take a deposit up front. Once we've earned the revenues, we record the revenues related to that project. If the revenues exceed the expenses, then there's a refund back to the customer.
I don't know, maybe we're trying to say here is simply because something is a revenue, it isn't necessarily a profit. Because the money, flows sort of back and forth and then out the door.
Yeah.
To some degree. Director Johnsworth?
Well, I just, mine is kind of off of that topic, but I was curious about the percentages. Is that possible to include in the report, like the percentage change between water consumption sales from 2023 to 2024? I'd be curious what that percentage is. And I could kind of eyeball it, but I didn't know if that's appropriate in this kind of a report.
Is that something that in the report, that's not something that you would normally include, the percentage change between 23 and 24?
We can include that.
You could include
Yeah.
that? That wouldn't be a problem.
Because I'm always curious of the, the rate of change over the years. And you do talk about some of the previous years, like 2019 and stuff too. I'd like to see what's going on in a longer period, because obviously it's easier for averaging over time because there's so many different variables every year. I mean, like you talk about when things come in, when property taxes come in or other,
Not a variable.
it's kind of feast or famine along the way.
We've looked at when we present the 630 financial report, we look at the consumption for a period of about 10 years at that point, but that's just the units. It's
Yeah.
not the revenues.
Yeah.
And so I could probably put something together that would show the revenues for that same period of time, if that would be of interest. But, yeah, I mean, in my trial balance, what I prepare that goes to the auditors from which they prepare this statement, I do have a percentage difference in there for my analysis. So if that would be helpful for the board, I think, and Jonathan is agreeable to that, we could probably add that in the future.
Yes, in the future, some districts add some historical information at the back of the statements. It's called other information. Some districts are including, water consumption for 10 years.
Yeah.
Or water production for 10 years. Or some will add, how much capital contributions from build-outs from the developers are being added for 10 years. So that's something in the horizon that or the district can explore, including in the future.
Because sometimes when we look at all these numbers, our eyes glaze over, right?
Yeah.
And if we had a percentage, then we could kind of have a perception of that we're really doing well, or kind of well, or not so well. If it was broken into something a little less numbers.
Manager?
I like the idea of having the other information page, because looking at it one year to the next, sometimes you have an anomaly year.
Right.
And looking at it over a 10-year period really gives you a better idea of where you're at versus the 1 year to the next. So if that was something of interest, I think, one page of starting.
Yeah, however we do it.
Revenues, the few little markers that we talked about tonight, it might be nice to have that back there. It's good reference material for the whole year.
There's a new requirement coming up too. I understand that budget versus actual information will be required to be included at some point, and an explanation.
Yes.
Oh,
I don't remember
great.
which GASB statement it is.
Great.
The future Gatsby, I forget the number, but
Yeah, I don't remember the number.
they're saying that it will be effective for 2025.
Yeah.
Very
So-
good, because I've asked for that
Yeah,
before.
so that should be in there eventually too. We do look at in the 630 report, we look at the budget versus actual at that point, and that is almost final. It's just, less any few last minute entries that are made as we're finalizing the books, but that will be forthcoming in the future as well. So I think that'll be a good thing.
I know you do percentages in other reports. I just wondered if it valid in this kind of
Yeah,
report.
yeah, I think.
The added page, I think, makes sense, because we could go into a little more verbal description of it.
Yeah.
What it means, kind of thing. Thank you.
Along those lines, the question was, can you put this in the report? Audits are conducted, I'm reading from the thing, you touched on this stuff in two parts of what you were saying earlier, but I want to emphasize it. Political reasons. And that is that these audits are in accordance with auditing standards generally accepted in the United States of America. And they emanate, apparently, if I understand this, from the comptroller, whatever that is, Comptroller General of the United States, and the state controllers, not comptrollers, minimum audit requirements for California's special district. In other words, your methods for doing an audit are not made up by you.
No.
They come from somebody. This is all very specific.
Yes.
And then we have the Government Accounting Standards Board, GASP,
Yeah.
which issues these letters of instruction on how to do audits, rules for how to do audits. And they're usually it's referred to as a statement or a letter, and they got a number like 96 or whatever, which is on page 231, 2 of 31. So those rules are not made up by you folks or us folks. These are standards that are generally accepted in the United States of America, and that's what we follow, and that's what we're being really good at these days. And also, there's the line or two about impartiality. which we always mention in these audits, there's this one thing that's seemingly impossible for us to account for. One of the notes or letters or statements or whatever it was. And we get assistance from the auditor to make sure that we're doing it correctly. And there is a threshold on the kind of assistance that he can give to us and still maintain impartiality. And occasionally throughout the world, the state, the country, whatever, that border is crossed and a separate auditor would have to come in to audit what the business and the auditor did.
Yes.
So nobody's making this stuff up. Okay, that's a key thing here, that, and this stuff is promulgated, you indicated it on a list up there to all kinds of people that could, that rely on this information. It must be as much as humanly possible, fair and accurate and easy to, I was gonna say easy to understand, I'll observe that. Is there any other interruptions we want to do now before we allow Jonathan to continue?
Well, I'd be curious, for this size water district, how many different water districts do you audit? Does your company audit?
Water district, if I will estimate in my brain,
Generally,
probably about 70 to 80 a year.
okay. And how many come out very clean?
That's a good
I'm not gonna hold you.
probably most of them, I should say, just a clean, like no findings, probably at 80%.
80%.
Yeah.
Okay.
Yeah, the 20% somehow have issues.
Which isn't necessarily a bad thing, it just means you're doing your job.
Yeah.
And I have a, before I joined the firm years ago, so I was part of a OIG team that audits recipients of federal grants, and we found some fraud, really bad fraud in other states. They are stealing money.
You are doing your job, that's good.
So just letting you know.
Well, the whole point is that when the train finally comes out of the tunnel, that we have a true and correct report. That's it. And the negotiations that take place between staff and the auditor, that's all normal business. And a lot of these corrections that are made over, and it's not an error necessarily. It's simply a correction is required because of an interpretation of one of these statements. It's a big deal.
And to have only one journal entry, that's a great achievement, by the district. We have some districts that have between 20 to 40 journal entries. Like it's a thick report,
So shall we let Jonathan continue? Please, sir.
I think Jonathan had presented the primary information, but if you'd like to maybe have him cover a little bit about the CalPERS net pension liability, would you mind speaking to that a little bit?
could share, let's see, the board packet.
And this presentation.
So let's see. Maybe we could share page 71 of the board packet.
A lot of fine print. Let me zoom in.
Okay. So, yeah, but speaking of suggestions by Director Jane.
Jarlsberg.
Jarlsberg. So it's good to have a 10-year historical background, as what you could see here. Like GASB 68 requires us to, or the district to have a 10-year presentation of your net pension liability. You can see here that the anomaly here was the measurement date of 2021, yeah, the third column. You can see here that your net pension liability is only $81,000. The reason behind that is during this measurement date year, CalPERS, they earned $4.3 billion of investment income. So which was allocated to all the districts and agencies across California, and which was deducted in your net pension liability balance. That's why it's $81,000 annually. However, going into next year, it shifted because CalPERS incurred a loss. So that's why there's a shift to $903,000 of your net pension liability. And this year you have $1 million in pension liability, which is an increase from last year because there it's not a good year also with CalPERS. They maintain the discount rate to 6.9%, comparable to last year. So that's why it's pretty much the same as last year. So, and just want to give a side note. Some districts ask me, or is always asking us, if should we pay this net pension liability? So we normally don't recommend paying those off because those will not go away. A good example is that we have another special district that we audit. So they try to issue a bond to pay off their pension liability. I think 2 years ago. Guess what? Last year they have $1 million in pension liability again. So,
And that's because of the fact that the actuarial reports are changing their mortality rates, various factors, inflation, and so those calculations are constantly changing, and the earnings, which is a big piece of that net pension liability as well.
But this is that one that we make additional payments on to keep the.
Right, to reduce the
Down, so the
interest.
interest.
Yeah, to reduce the interest. So we make additional discretionary payments. We haven't discussed paying this off because we know that there's not such a thing really as paying it off. You're just trying to mitigate and keep up with it as best you can.
yeah, I'll give an example. Yesterday I presented with one of the water district. They have roughly 14 million in net pension liabilities.
Ooh.
But you said, you know. So, but your size, this one is a good number.
Yeah, okay.
Great number. Any questions that you may have on the net pension liability?
I'm getting those from our chair of the Citizen Advisory Council too. Do we have any other public comment on this? Are you done with your report on the whole Magilla?
Actually, I'm done with my report, so any questions that the board and members of the public and district team have, I'm here to answer those questions.
David, you seem pretty focused. Yeah, that's something additional.
No.
I was just gonna suggest that you always talk about the audit season. I think you actually ought to say the non-audit season. Those 2 months that we're not auditing, which, you know, I wish that could be changed, but anyway.
Do we have a motion to approve the 2023-24 audited financial statements? Thank you. Is there a second?
I'll second.
Thank you very much. General Manager Johnson, a roll call, please.
President Flowing,
Yes.
Vice President Doolittle.
Yes.
Director Fick,
Yes.
Director Jarlsberg,
Yes,
Director Short.
Yes.
Very much. Motion carried.
Bravo.
yeah.
Thank you, Jonathan.
See you in a couple months. No, I'm just kidding.
Happy holidays.
Holidays.
Yeah, happy holidays.
Take care.
Yeah.
Very well. Government Investment Pool Selection. Once again, Ann Roman, Director of Finance with Productions.
Thank you very much. We do have tonight some information for you about local government investment pools. There are essentially three options available to us here, including CAMP, which is the oldest pool, originating in 1989, class in 2022, and CalTrust in 2003. And so in response to the board's request, in October, the district revised our investment policy to authorize investment in these types of pools, a joint power authority, local government investment pool. And that policy does require us to follow government code, which I just always like to remind everyone that when investing, reinvesting, purchasing, acquiring, exchanging, selling, or managing public funds, the primary objective of a trustee shall be to safeguard the principal of the funds under its control. Very important thing to consider. The secondary objective shall be to meet the liquidity needs, and the third objective to achieve a return on funds under its control. So since the spring of this year, we've actually been researching these three. And most things being comparable among the pools. They're very, very similar. The returns are very similar. But there are a few things that in my mind set them apart. And those things are the fact that CAMP has a significantly greater longevity than the other pools, having been established in 1989 versus the newest in 2022, and that is class. CAMP limits a single investor to investing no more than 10% of the overall fund, which promotes equity and prevents potential fund instability. And CAMP also follows GASB 79. So that is a little bit of an extra benefit there. And maybe Kyle can elaborate on that. We do have Kyle from CAMP here, Kyle Tanaka. He's going to be available to answer questions for us tonight. So I'll turn that over to him in a moment. We also have Crystal Lynn available from class, so she'll be able to answer questions that the board may have as well. Before I turn over to back to the board for questions, I wanted to also mention that there is risk involved in any of such plans. Not taken lightly. However, I think they are very safe and I'm very comfortable as opposed to, when we came into this process, not as comfortable. I've definitely gained a comfort level with this option. So staff does recommend enrolling in CAMP, and I did prepare for your review here. Director Fick had asked for a comparison of the class and LAIF, and I included CAMP there since that is what I'm recommending. And I'll just read to you from the bottom there because there's a lot of numbers on this page. Basically, over the last 25 months that I looked at, CAMP earned the most. 1 million, this was on a $10 million investment over 2 years. CAMP earned the most with an average yield of 5.0164%. It earned $1,099,165, which was about $7,900 more than class. However, LAIF earned $311,000 and less than. So definitely looking at LAIF, that is not earning as well as class or camp. So class earned was the second highest earner, camp was the first highest earner, and LAIF, obviously in this comparison, the third highest earner. Very, very similar though between class and camp in terms of earnings. So I will say also that what I'm recommending is that the district consider investing two of our more static reserve funds, which is the wastewater capacity charges fund and the emergency capital replacement reserve fund. And in total, those two funds are $5,122,000, which is about 26% of what we have with LAIF. So that's a big chunk,
Repeat that percentage?
26%. And earnings on the wastewater capacity fund, I just want to make you aware, those earnings will stay with the wastewater capacity fund. They have to be restricted with the wastewater capacity fund, which is a restricted fund. However, earnings on the emergency capital replacement reserve would be available to the district in general revenues. And just a side note also that any increased interest that we earn could be offset by some additional workload. And, you know, we may potentially have to do a little bit of outsourcing to offset that. Fiscal impact on this item is really unknown because investments are subject to market risk. The interest rates are actually going down right now, I think. So Kyle can talk about that a little bit more, or maybe Crystal, but potential increased earnings also may be offset by some additional cost in our case. And with that, I will be happy to take your questions. And also, I think Kyle and Crystal are open to questions as well.
Vice President Doolittle.
Well, this was, thank you for this and thank you for the additional data that you provided. And this was, again, something that we did review in the Finance Committee meeting. And the question that I had there was, why not invest in both? I didn't quite understand why. And in that meeting, I know that Crystal said that actually class has been around a lot longer because it was nationally around. So that might be a little, you know, so that there's not that big of a difference. But again, I, as I said in the committee meeting, you know, I respect our finance director's opinion and suggestions on what we should do, but I didn't quite feel like I was convinced one way or another. So that's what I have to say about it.
Director Fick.
Well, to be historic about this, it was Crystal who I met at before lunch at an ALCO meeting, and then with her second. So she's the one who provoked this entire investigation. And I think it's timely in the sense that we don't know where interest rates are going to go in the next year, which is kind of scary because there's other scary parts to the year. And so I would like to see an investment pool that can react to the interest rates quickly, which is LAIF can't do. So that's why I'm looking towards the pool situation heavily. This comparison with the 10 million in 2 years, that's about what I figured it would be. And I want to thank you for that. I'm impressed by the fact that I just requested this whenever I did, and you two have General Manager Johnson and Director and have jumped on it and done a thorough investigation. I'm impressed, you know. I'm not in a position to have the resources I have here, and I'm very happy with that. So, yeah, I'll wait for more questions. So.
Director Jarlsberg.
That just reminded me, what Director Fisk was talking about, that you've already sunk time into this. And you would have to sink more time into it by administering it if we choose to do these. So I would add your already used time to this total,
Oh, right.
to your research. And I also did agree with Director Doolittle. Crystal pointed out that class really has been in existence longer than 2022, so.
Class has not been,
Or
class has,
something.
but the investment firm that class started with. Crystal, you're.
Yeah.
I didn't explain that.
Hi, yes, class was started in 2022, but the company that I work for, Public Trust Advisors, who is the portfolio manager, has been around since 2011. And if we're only going to be looking at dates, I'd like to expand that and say we should also look at assets under management. And as far as we are concerned, Public Trust Advisors, we are the largest provider of local government investment pools in the country with 90 billion assets under management.
Is that larger than LEAF? Is that what you're saying?
Local government, no, not the state pool. The state pool is quite
Okay.
a monster.
Yeah.
But the local
Okay.
government investment pools that are strategized across the country. And we have 20 pools across the country. California class is not unique. We have a Florida class, Texas class, Michigan class, and you can go on 20 times around the country, which add up to 90 billion under management.
Okay, thank you for that clarification. The other thing is I thought that we had talked about LEAF interest being around 5%. But so I was surprised to see the average is 3.3 or 3.4.
Right, in this comparison, it ranged from 1.35 to 4.71.
Oh, okay.
This is over 2 years' time. So currently, or the most current interest rate was 4.71%. From
So
like,
it was almost 5%.
It was.
Currently,
yes,
but the average is lower.
correct.
Yeah, I think that's, and I do appreciate the work you went into this and the experts you've invited. I'm glad that we're talking about this. That's all I want to say right now.
Director Short.
Yeah, if you could remind me of any liquidity differences between the three options?
Very minimal. I think they're very similar, as most of the characteristics of the pools are. One of the things that I know that Crystal has mentioned in the past is CSDA sponsorship, which class currently has. However, I will say that we have not, as a district, solely followed CSDA sponsorship. For example, with our insurance pool, we do use Aqua JPIA instead of SDRMA, which is endorsed by CSDA. So we do that because it fit our needs better. And so the liquidity, maybe Kyle can speak to the actual liquidity situation there. I don't recall.
Yeah,
exactly.
so for camp, we have an 11 a.m. cutoff time for wires and 1 p.m. cutoff time for ACHs.
What's HCAS?
ACH.
Yeah, whatever it is. What is it?
Essentially a debit pull, debit in, debit out of an account.
Oh,
It's a form of moving funds in and out. It's,
Yeah, automatic draft.
yeah.
oh, okay.
Just those are purely transactional. When it comes to liquidity and kind of as to help, I guess, in evaluating these pools, in my mind, I default back to GASB 70 for our governance and what our board has elected to adopt, and they felt is important for safety for our public agency shareholders. By following GASB 79, 10% of our fund has to sit in daily liquid investments at minimum. That is to meet redemptions and withdrawals on the fund in case there's a run on the fund or folks need to move money in and out. Furthermore, there is an additional 30% requirement of all your assets to be in weekly liquid investments. So that 10 and 30 horizon is how we at camp think about liquidity. Those are the pure minimums on a pool of roughly $17 billion.
Okay, there's no real, back to the CSDA sponsorship, there's no real benefit to, okay, that's just kind of like
No,
their suggestion, I guess.
I mean, I
Well,
would
actually,
not.
I would say it's not, they're not just recommending class, they really have skin in the game. They are the ones who hired public trust advisors to manage the portfolio together with League of California Cities. And those two organizations are very important in the state of California. The reason they created California Class is because there was a great demand throughout the state that said we need more options, period. And they put a list of reasons and what those demands were. And the number one demand was they wanted it to be governed by their peers. And so, it is the CSDA who went out and hired the attorneys. They went out and hired the accountants. They went out and hired us through RFP process. And again, the reason we were selected to manage the portfolio is because we are the biggest. And we also pride ourselves on our customer service model, which we consider second to none. And of course, you have folks like myself, which we consider value added with 30 years of experience in financial service industry, where we can be there side by side with you to walk you through and hold your hand through the process.
Okay, that's all for me. Oh, okay.
Oh, respectfully, as it relates to associations and association sponsorship of local government investment pools, being that our pool has been in California for 35 years, we have had conversations over the years with local government trade associations. The reason why the camp board has decided not to partner with local government trade associations is they believe that additional marketing that the associations receive or money that the associations receive from the underlying pool is inappropriate. So, and I would like to also make a statement that my board has a special district representative on the board and has been served by special districts through its history as well.
All for me.
Very well, thank you.
Follow up,
Go ahead, Jane.
just a couple things. I'm not sure who would answer this, but I'm wondering how these pools benefit from our smallish budget compared to maybe some of the other companies you're working with. Why would you want us?
I think that's actually a personal perspective. I view camp and local government investment pools as a service to public agencies. I began my career at CalTrust, the first or one of the other pools that you evaluated as well. I've seen throughout my time, perhaps in almost 10 years now, how it impacts. And we look at the comparison of return against LAIF, take class and camp out of the equation. That is an additional employee at the district. That is another project service. That is the direct good that I see that these pools impact in terms of us and why we would want assets under management. I think in my eyes, the more assets that are inside the fund, the lower the expense ratio is for us. To me, that helps our investors furthermore.
And also I'm wondering, what's the benefit? I'm not an investor. I don't have money. I hardly have a savings account. What's the benefit of diversifying? Having these three pools?
Yeah, I think from my vantage point, I'm always going to probably default to risk. You're concentrated right now, 99%, 97%, I mixed it up in the audit inside of LAIF. So first it's spreading risk because these pools, any pool, camp, class, LAIF is a commingled vehicle already of other investments, but it further kind of spreads the district's proportional risk tolerance while investing. So that's how I see it.
I'd like to see that in writing.
You what?
I'd like to see that statement in writing, because that really clears it up, I think.
Yeah, absolutely.
Yeah.
And
It's also the old,
sorry.
Yeah.
One
old saying, Oh, I was gonna say, it's the old saying, don't put all your eggs in one basket.
Yeah,
You know, you want to spread your money around to diversify the risk.
The only other point I was gonna add is that I'm actually FINRA licensed as well. So I have a fiduciary responsibility when selling or soliciting business on behalf of the pool, and I have a fiduciary responsibility to my board of directors.
thank you.
Same,
That's all.
same.
Well, for me, I sort of have a concern about investing our emergency fund in something other than the state. I have a comfort level about that.
It's the emergency capital.
Or replacement fund.
Clarify.
So anyway, another thing I won't say about that. There's been a lot of communicating this meeting and at finance about the percentage of benefit earnings that we get on this stuff. But I want to emphasize that this thing about safeguarding the principle of the funds it is not just a cultural thing or something that is codified in one of the sections that you referenced in your staff report. It's 58-600.5, where it says the primary objective of a trustee shall be to safeguard the principle of the funds under control. Secondary would be the liquidity, and number 3 would be the return on the funds. And so those are specific priorities. And that the fact that it's codified, this one,
Yeah, let me get.
I have a copy of it.
Okay.
It's a codified thing from the government code. And so
Absolutely. Yeah, I was going to mention, you're absolutely correct. It's California Code 53601. It mandates that these pools follow that code, and it's exactly the way you described it. It's considered the guardrails of public investing, and it is, you know, safety is number one. That's why all of the money is invested in fixed income, which is AAA rated. It's the highest quality fixed income that exists on the planet. We're talking about CDs, we're talking about bank products, we're talking about government bonds. And so there is where you're getting your safety. And liquidity, you've got to be able to get your money same day. We, you know, even though the money is pooled in investments, we keep, right now we have 400 million. We don't say that we have to have a certain percentage. We watch the behavior of our clients, and whatever the behavior of our clients, we watch the ebbs and flows of the money coming in and out of the pool to make sure that we can always meet those demands. So liquidity is absolutely number 2. And then yield is last. It's always last. But right now it becomes very important because it's an unusual time that we're in right now, because yields are quite high. Even, you know, as interest rates start to ease, we can still see that, you know, interest rates are still very attractive. And, you know, those repairs, you know, as Kyle mentioned, you know, hiring staff members. This is something, you know, getting things that have been broken. I have fire districts that have had fire trucks that they couldn't get repaired for years, and all of a sudden they're getting them fixed and buying new trucks just with the interest alone. So you're absolutely correct. It's California Code 53601, and we do abide by it, and it is required of us.
so another thing that I'm a little bit concerned about is right now governments are transitioning, so to speak, especially on the federal level, from you might say one philosophy to another. And I'm concerned about the stability issues as this transition takes place, which could have an effect on finances and money and bonds and investments and markets and all of that stuff. And so should there be a sudden loss of value of investments. I would rather have, our investments in something like the state of California, where if suddenly we lost a lot of money and the ratepayers are out there pounding on the door saying, where's our 5 million? Where's our 5 million? We could just say, hey, you know, we invested it with the state of California Department of Treasury. And rather than saying, we invested with the California State Department of Treasury and 5 million in camp or class, and they would go, where are those? What is that? There's some sort of a advantage, I think, to having the money in something like the state of California. And also even the concerning thing is the relationship between the government of the state of California and that of the immediately future federal government. I don't think there's going to be love lost there. I could hear other opinions about that, but in that kind of an environment, there could potentially be, because a lot of the investing stuff is a perception optics kind of a thing, people's emotions about how they invest. And so there's a comfort level for me to invest solely in the state. And even less of a comfort level to invest in both camp and class, because the diversification, as far as I'm concerned, comes from what you folks singularly invest in, you know, hundreds of things. But one of the things that we could do, if the board does decide, I'll be with you in a minute.
Okay.
One of the things, if the board does decide to do one of these other alternatives other than the state, that we wait. We can approve it now, but we wait until we see what happens with the federal government and their relationship with the state government before we commit any money. And some of this comes from your references in your staff report. This 53600.6, which says the legislature, this is California state, finds that the solvency and credit worthiness of each individual local agency can impact the solvency and credit worthiness of the state. Therefore, to protect the solvency and credit worthiness of the state, the legislature hereby declares that the deposit and investment of public funds by local agencies is an issue of statewide concern. In other words, there's two ends to a rope. And what we do affects them also. It seems to me that what they do affects us. And then that gets into some of those dangers that I'm a little bit worried about. This isn't my money we're talking about. It's the community's money, which is hard to come by because they don't make a lot here. Folks are poor here in large numbers. So I also have to say, flip the coin over, is that everybody does this. High Desert, I'm sure does it. I know that Bighorn Desert View does it. I know that Mojave Water Agency does these investment things. So it is the coin of the realm. It's a cultural thing. But old Tom here, I just feel comfortable with what we've already been doing. And also this expense relative to potential earnings, the expense that in monitoring this stuff, whether we use Ide Bailey for helping with the accounting or if we use our own staff, that kind of thing. I'm a little bit worried about the cost too, because I'd rather it be a cost going through an outside accountant rather than put an additional burden on our staff. You folks are fairly busy already. Thank you very much. So that's an overview of where I'm at. Director Fick, you wanted to start?
A bit. Well, LAIF does a turnaround, or their investment maturity is 397 days. So whatever happens, I don't know how they invest. I mean, they got to have rolling investments. I don't think they're all at one time, but it's a slow one. And both Crystal and You,
Kyle.
Kyle, can answer this question, but I don't know if the state of California will step in like an FDIC and say, okay, you lost all this money, we'll give you some more. So that's not gonna happen. And the investment pool is the same quality as what LAIF does as far as guidelines go. Those two can tell us that situation.
Director Fick, so there is no statutory guarantee like FDIC for LAIF. And in respects to kind of external safety, you know, both of our pools are rated by rating agencies. The state, for whatever reason, has elected not to have a rating on their investment pool.
Yeah, if I could add on to what Kyle just said, that we do invest identical to the state LAIF, and the only difference is what we call the WAM, weighted average maturity. And it's, you know, for the state of California, they are out over a year for their investments, for their CDs, for their government. And because it is a very long weighted average maturity, when interest rates were going up, they were left behind. Where with us, we were 60 days or less in the prime pool. So we were keeping our maturities very short term, around 30 days. We were able to make those decisions internally with our portfolio management team and our credit team. As a matter of fact, our credit team, even though we are AAA rated by Standard & Poor's, internally, everything that Standard & Poor's does, we do it too. And doing those things internally, we can see around the corner and know what S&P knows even before it's public information.
Director Fick, do you have more on that?
Not right now.
Vice President Doolittle?
You know, I was just wondering, as President Flowen was kind of indicating the unknowns regarding the change in administration. And to me, I understand that with the Republicans in power, that we're more likely to have a bear market. And I'm a little concerned that we don't try to go ahead and invest right now so that we can actually take advantage of you know, increased or, you know, better returns. I just wonder if that's the case. I don't know how tariffs play into that. I'm not quite sure, but if you guys could comment on that.
Sure. I mean, ultimately, my recommendation to the district is always going to be when you are ready. Interest rates will go up again in the future. We will see rate cuts in the future as well. We'll see a stable rate environment, hopefully not a zero rate environment like we had in COVID. It is when the district is comfortable, ultimately. That's my recommendation. That's my view. President Bowen, to your comments about the concerns, you know, I respectfully, this is why I think camp is different and stands alone. It has been in the state for 35 years. The pool itself was established in 1989. It has seen different economic environments, market environments during that time, 2008, 2009, Brexit, COVID as the most extreme, most recent example of a zero rate environment. Our pool has been through this with our public agency shareholders, respectfully.
He's absolutely correct. We had, you know, for 2 decades, interest rates at zero. You know, as interest rates go up, our portfolio management team will adjust. And one thing I do want to also mention, we have 2 pools. We have a prime pool, which has maturities which are 60 days or less, but we do have an enhanced cash, which can go out to 200 days on the maturities. So if you think about interest rates going up, you want to keep your maturities very short term. That's why prime is very popular, and prime is also what camp is. But for those times when interest rates are coming down, you want to pull those interest rates out, or the maturities out, so that you can hold on to those interest rates for a longer period of time. And that's what the enhanced cash does. We don't go out over 365 days like LAIF at the state level, but we do go out to 200 days, so that as interest rates are coming down, you can hold on to those interest rates for a longer period of time. and by the way, you can move between enhanced cash and prime at will on a daily basis. They are inside of one account, and you can even divide your assets up between which type of weighted average maturity you prefer. Of course, your day-to-day business would be in the prime because that would be your cash management account. But if you're looking for a more intermediate term type investing is what we refer to it. A lot of our special districts and municipalities will go out to the enhanced cash for those longer time horizons.
So if there's a shorter maturity date, a lot of this stuff I'm not familiar with, a shorter maturity date on something relative to a longer one, do you get paid sooner on the short one or on the?
Everything is not at all. Everything is buy and hold. We don't, any CDs that our portfolio management team buys, we hold those to maturity. And as a matter of fact, every bank, because we have 90 billion under management, Public Trust Advisors, the company I work for, we have a seat at the table for every single board meeting. We have a seat at the table for every finance meeting, for every bank in the world. And we're able to ask those very tough questions to the finance committees to make sure that we have confidence in what they are doing and we can continue to have that AAA rating.
Mr. Tanaka?
I'm hoping not to get into a comparison here. Ultimately, I'm not sure that's the question to this board, but in terms of the infrastructure or support and I guess shorter maturities versus longer, our portfolio or pool for the program is actively managed. So if there is an opportunity for our desks to increase earnings in the portfolio, they can sell a security in and out as long as it fits under the guidelines or authorized investments in the pool that the board oversees. In terms of a backstop or additional support for it, for PFM Asset Management, it's a subsidiary of US Bank. Yes, we have 81 billion in LGIP specific assets are part of, I think, the fourth or fifth largest bank in the United States. And so when we talk about access to credit resources, I'm quite proud of what we offer in our team and the support that's behind the program.
With Public Trust Advisors, just to continue on with what Kyle just mentioned, at Public Trust Advisors, public finance is all we do. We don't have any high net worth type investing. We don't do private client investing. We focus on public agencies. We want you to rest assured that this is our focus. This is where we are. This is where we're going to continue to be. And we're not deviling out into, like I said, any type of high net worth investing or private client. And we'll continue to do that in the future.
Well, my final, did you have something else, David?
Possibly. I'm curious as to the maintenance of these accounts. And, Director Roman is going to have to deal with this. Can she just write a check and hand it to one of you guys? And no, how's it happen? How does this of the account happen?
Thankfully, go for it, Crystal. I've let off, so you can answer.
Eide Bailly, the organization that you work with, we work very closely with them. We have several participants in California class, and Eide Bailly does do the accounting for them. As a matter of fact, we meet on a regular basis with the partners, the managing partners, the owners, as well as the accounting staff. So we know Eide Bailly. Eide Bailly knows California class very well. And so I don't think you'll have any problems with that organization whatsoever when it comes to us.
If I could just add, we're not considering outsourcing management of this task to Eide Bailly. We're considering outsourcing other tasks to Eide Bailly to make room for this additional task.
Excellent managing.
Oh, really? Oh,
You
okay.
get points for that.
Thank you.
Director Fick, if I may,
Yes, sir.
to answer your question about the transactions and either one of us a check, it's done through our online portal where you place transactions, or you can also call in and work with one of our customer service representatives to place the transaction. So nobody's going to be handing us cash or checks at all.
No.
thankfully.
It was bigger too. so.
Electronic.
Now, the
Yeah,
work.
everything's electronic.
I'm sorry. The workload comes in really in recording. We have additional bank accounts, additional statements we've got to record on our books. We've got to do additional work with, so even with one of our more static accounts like the wastewater reserve, we have still activity there that we're going to have to transfer interest back and forth. And, you know, there's just workload to record those transactions on our books. That's not something that either class or camp can really help us with. But it is an additional task that we will have to take on. And the fact that these pools compound more frequently, so we earn interest more frequently, and compared to LAIF, which compounded on a quarterly basis, and we only had to record interest on a quarterly basis. We're going to be looking at doing that on a monthly basis now for the additional accounts. So it's just additional transactional work.
And additional money, additional income.
That's a good point. Very well.
GM wants to say something.
I'm sorry, I can't hear what
I had a
fingers.
question. I had the opportunity to see classes portal, and I don't know that I had the opportunity to see camps portal. And what's the differences with within the portals? Is it easy to navigate, easy to use? I'm worried about staff time and management.
Yeah, I would say our is industry standard and fairly easy to utilize to place transactions, pull monthly statements. There's some other bells and whistles in there, but again, from a time perspective and resources, I would say it's industry standard and easy.
Thank you.
And for California class, we put $2 million into the portal just prior to launching California class, because it was very important for our client service model that it be as intuitive and user-friendly as possible. With just a couple clicks of the keyboard, you can move money in or out of California class. And our reports on demand, any type of report that you're looking for can be put into Excel, so you can export that out into your own reports, and you can drill down and find exactly what you're looking for, whether it's just income, if you're looking only on contributions or distributions. And we are paperless, which means that we have a very hands-on, where if you hire anyone, you don't have to wait on us to go in and add that person. You can go into the portal yourself as long as you're an authorized signer, and you can add someone. If you need to make changes to the bank information, you can go in there and do that yourself. You don't have to wait for us to do that. Bank information requires 2 authorized signers to make any changes and adding or subtracting any of the employees who have access to the portal would be an authorized signer.
Industry standard, yeah.
Yeah, I previewed both portals, and I found them to be pretty comparable. No huge issues or concerns over one versus the other. If I might, I have just a quick comment that I would like to make.
Especially you.
We're getting ready to wrap this up. I just wanted to say that in response to Vice President Doolittle's comment about not really getting my backup, I guess, for my decision on what I'm recommending. And I just wanted to go back to, again, that proven track record of a pool that's been in existence for 35 years versus something that's very, very new. And that gives me, a better comfort level, moving away from something that the district has been invested in for a very long time and has been very comfortable with. And I don't think there's a wrong decision or a bad decision between these two options. And I'm of course in support of whatever the board decides. But, you know, the camp pool is my preference, my comfort level.
So based on that, is there a motion from the board to select CAMP as our local government investment pool to supplement LAIF?
I'll make the motion.
Is there a second? I'll second it. And Vice President Doodle, yeah, let's do it that way.
Oh, you mean as far as?
Should I roll call the motion?
Yeah, I'm sorry, that's where I'm at.
Okay, I need to roll call the motion. on the
question?
floor.
Can't, no more discussion?
We've got a motion on the table, yeah.
Yeah, so we can go through the process unless Eddie, can they still have discussion when there's a motion?
They can.
Okay.
Well, I just wanted to state what my reason for voting would be. That I was listening to what you were saying earlier, and I tend to agree with putting off any implementation of this until we know what's going on between the state and the feds. And I'm a little cautious about that too. Would putting it off be difficult? I mean, you know, if we said yes and then wait 6 months or something like that, I mean, it.
No, we have plenty things to do in the meantime, so
Right.
no, that wouldn't be a problem at
I
all.
mean, can we condition our vote?
Yeah. So we'll need Eddie's help and with the motion on the floor, but
Yeah.
we could do the roll call and see if the first motion passes. Can there be a second motion at the same time? Or should we do it back to back, Eddie?
You could do a substitute motion, but right now you have a motion on the floor that's open to a vote. You could go ahead and vote on it if what the board would like, or you could have a substitute motion. But it seems that right now there is a motion on the floor. There has been a second. The recommendation would likely be to vote on that one, take care of that
Yes.
motion, and then move on to another one.
And it's only for camp, right?
Yes.
My
This
understanding,
time,
okay.
yeah. But the when part would be, that's kind of an open door anyway, isn't it? I mean, it doesn't have to specify some 6-month thing at the beginning of the next fiscal year.
It'd be up to you.
Yeah, it would be
Yeah.
up to me and so I would respect.
That's what I want to know.
Yeah.
Yeah. Okay,
The other part, I think in this motion that's missing is which funds. So we need to be clear what
But right now it's the 5 million.
that's been recommended.
Yes.
Okay, I just want to make sure that that's clear as well.
Ready for a roll call?
We're still in discussion. My concern is, would probably be a 180 from Jane Gilesburg on this. I would like to have our investment pool reactive to what's going on. And being that LAIF is 397 days, whatever it is, it's a lot slower than what either of these.
oh, I see what you're saying.
Yeah, that's my concern, because who knows what's gonna happen in 2 months? Oh,
That's my point.
yeah, but we're standing still if we don't.
Well, we're still earning on our investments as they sit, but fractionally,
Yeah.
having a more athletic, responsive to conditions, investment strategy, it's hard to argue against that. But I have an enormous respect for our Director of Finance.
Yeah, I want her comfortable.
So if I want to just stay with LAIF, and if she says that we can do one of these things and her choice is camp, then I'm not gonna, I'm just some kid from North. What do I know? I must go with what? Or how long you been here? 15 years, 12?
17 in January, I think.
Yeah.
Yeah, and I barely have a savings account and it's 0.01%.
So is there a motion from the board to select?
It's already happened.
Yeah, I know, I'm repeating it just for
Okay.
fun. Is there a motion from the board to select CAMP as a local government investment pool to supplement LAIF?
I'll make the motion.
And second? Was that, did you already do that, Jane?
I think
didn't-
seconded it.
You were,
I
you were,
didn't-
you were second.
Oh, I did? Yeah, I'm old. Roll call, please.
President Flowin,
Aye.
Vice President Doolittle.
Yes.
Director Fick,
Yes.
Director Jarlsberg,
Yes,
and Director Short.
Yes.
Well, thank you.
Thank you very much. Motion carried.
I think either was a good decision.
Thank you very much.
Would have been either way.
Well, appreciate all your time in this process.
both of you, thank you.
Yes, both of you. You've been very helpful and
Yes.
I've learned a lot through all of this. So
Yes.
it's been good.
Happy holidays, everyone.
Thank you.
Bye.
Okay, next item, 23-24 reserve usage and funding transfers. Once again, ever busy, Roman Director of Finance.
Oh, let me bring it up. Share my screen here.
Take your time.
Thank you. Okay. I meant to show that other one earlier, but I missed it. Okay. Now, just in case we need to see this on the screen, I did bring a few more handouts, so I'll pass those out in just a moment. But to start, I just want to remind the board, this is very routine. We do this annually. This is just the process of replenishing what our individual reserves have fronted for usage over the year, and also our rate study has designated a certain amount of reserves that we need to put into those specific funds. And so just to back up a little bit, maintaining adequate cash reserves is crucial for sound financial management, ensuring the ability to meet both short and long-term obligations. The reserves support reliable service for ratepayers, fund long-term capital projects and enable emergency responses, and safeguard financial stability against uncertainties. So this policy that we have in place, the reserve policy that's currently in place, which does need to be reviewed, and it's on the list to review as soon as we can. The policy states that the board shall approve any reallocation of funds, which is why we're here. And we do bring this information as far as how we intend to use those reserve funds to the board in the budget process. We talk about that, but sometimes things can change somewhat, so we bring it back again at this time of year. Also to shore that up and also deal with the rate study reserves that need to be restricted to their specific funds. So typically the reserve transfers occur only annually, except for the legally restricted reserves, which we adjust as required. So those are our capacity charge reserves. That's our deposit from customers, and also our CMM reserves. So we have some details for you here on the screen. We are going to propose transferring $1,049,970 from individual LAIF reserve funds, such as equipment and technology, meter replacement, capital, etc., to reimburse the LAIF cash flow reserve for the project usage during the year that the cash flow reserve paid. We are proposing to transfer $2.76 million from LAIF cash flow reserve to various LAIF reserve funds as designated by the 2023 rate study for this fiscal year. And in addition, we need to shore up the LAIF operating reserve to that 3 months of operating expenses that we have to have set aside in that account. And so for that, we're proposing to transfer $156,420. And all of this activity will result in a net decrease to the LAIF cash flow reserve of 1.866 million, but the actual LAIF balance will not change because these are just transfers within the LAIF, the overarching LAIF fund. Move on to my detail page. And I'm gonna hand out, this is the same data, but I did this a few years ago, maybe last year, maybe before that. I did an analogy of what this, thank you, of what this might look like if you were doing this on a personal level. There's a lot.
I don't know.
Yeah.
So because there's a lot going on this graph, there's in and out. I thought it might be helpful to just compare this to if you are on a personal level, setting aside funds into cash budget envelopes throughout the month, and also replenishing those budget envelopes from your savings or checking account each month. And so if you look at columns 3 and 4, that's essentially what we're doing there. In column 3, we're using money from those cash budget envelopes. And in column 4, we're replenishing those budget envelopes from the savings or checking account. This example is on a monthly basis. However, we only do this annually here at the district. And so I have some comparisons on the side, on the left side in yellow there. You might compare the equipment and technology replacement account to something like auto expenses, meter replacement to household repairs, capital routine, maybe a new AC system. These could be categories that you have budget envelopes with money set aside in them. So hopefully that makes it a little bit easier to interpret what is going on here. But I want to give you the detail of what usage comprises these figures for 23, 24. The equipment and technology replacement fund paid, well, it may come out of that fund because we pay everything through the cash flow fund, but it needs to come out of the equipment and technology fund because these expenses qualify to be used. Vacuum excavator, concrete mixer, 4 replacement trucks, a tire changer, 2-way radios, file server, A1 tank SCADA upgrades. Those amounted to $345,850. And in addition to reimbursing the cash flow fund, which paid those expenses initially, we're also going to, from the cash flow fund, replenish the equipment and technology fund with $375,000 because our rate study said we're going to set aside that much money if our net revenues or our earnings basically support that. We meet our target balances on our budget, which we did, and well beyond that. The next line, meter replacement. So these are our meter installation costs. We'll have to do some syncing up with this program at the end. We're in the last year, I believe, or so of this program. We will, like I said, we'll have to sync that up a little bit when we get to the end, but it looks like we might have a little extra funding left over in that reserve once the program concludes. For 23-24, we had qualifying usage of $351,383, and the rate study designated another $185,000 to replenish that fund. Capital routine, as opposed to our emergency capital. So this is our normal capital account that we use. It funded the E21 reservoir upgrade, Tilford Phase 2 design survey, paving at the shop, 1 new truck, 3 cantilever gates and a flow meter at well 16, E21 booster pump replacement as well. And that was in the amount of $297,330 in total. And so that is going to go from the capital reserve to the cash flow reserve. And then the cash flow is going to give back $2 million because that's what the rate study designates from net revenues. Building replacement, no activity there. That's one of the reserve funds that we really need to look at when we bring that policy back for revision. There's $96,000, a little over $96,000 sitting in that fund. And at this point, we're not really doing anything with it. It's not enough to replace the building, obviously, and we don't have, there's nothing designated to increase that fund at this point. So we need to decide whether we want to perhaps in the future designate some funding towards that purpose. We have also the studies and reports replacement reserve, and that one funded the 2023 hazard mitigation plan and an annual water loss report. 55,407 there in qualifying usage versus 200,000 coming from the rate study back to the reserve. The emergency capital replacement, we don't have any routine activity with that. That money just sits there in case of an emergency. So nothing happening there. Wastewater capacity, as I mentioned earlier, the legally restricted funds like wastewater capacity and water capacity, those we restrict those transactions as soon as we collect them, basically on a quarterly basis, not immediately, but on a quarterly basis, we're restricting and moving those funds into the appropriate reserves to be restricted. And then we have the collection of other legally restricted reserves, which is our CMM, our customer project deposits, et cetera. And again, those are being restricted as those transactions occur. So nothing happening in this particular process here tonight. And so at the very bottom, we have our operating reserve, which has been designated by the reserve policy to contain 3 months of operating expenses per the budget. And our cash flow reserve, which is designated for 3 months of operating expenses and cash flow and cash fluctuations. And I'm going to give you this as well. This is a little bit of a, maybe I should have given you this earlier, but this shows you what all those, thank you, how all those accounts relate to each other, if that's helpful at all. Showing that we have one, this is going to change, but when we add camp into the mix, but for now, we have one LAIF account. I call it a physical account. It's one actual account. We have sub-accounts or virtual accounts within that. And that's what these reserves are. So in the end, the operating reserve is going to have, just a second, I'm gonna write the totals down here somewhere. I don't know where I wrote it. There it is. Okay. So the operating reserve is going to, actually the operating reserve is going to only get the $420 that is needed to bring the 3 months of operating expenses up to that requirement. So we're transferring 156,000 into the operating reserve. The cash flow reserve is really where all the activity is going to happen, the bulk of the activity. The cash flow reserve is going to provide 2.6 million to individual reserves and that 156,420 to the operating reserve. And the individual reserves will reimburse the cash flow reserve for $1,049,970 in usage. I know this is really a lot of back and forth, but as I mentioned earlier, no net change to the LAIF balances. This is all happening within those LAIF sub-accounts or virtual accounts. And I'd be happy to take any questions. I know this is really kind of a tough topic. I'll do my best to
It's
answer any
not.
questions you may have.
Essentially, you're moving the jets around on the same aircraft carrier. We could still fight.
Yeah.
Go ahead, Vice President Doolittle.
Okay, so yeah, in the finance committee meeting, I was understanding that we had 6 months worth of reserves in case of an emergency. But when I look at this, and it's the bottom one, it says your savings checking account. That checking account is actually what we're using to conduct our business, right? So that's not just sitting there waiting for an emergency. We're actually using that all the time.
We're not actually.
Oh,
using
okay.
that. If you look at the mapping, this.
Yeah,
What we use on a daily basis is our general fund account with US Bank. So
okay,
that's up the top left.
okay,
And then we transfer money back and forth between that and LAIF as we need to either increase our cash flow or decrease our cash that's in that account.
okay.
And then we have our payroll fund as well that, we pay all of the payroll transactions out of. So in my comparison, this would be like your savings or checking account here at the bottom. But for us, we have one more layer. We have that US Bank account. That's our where all of our daily activity occurs.
Okay, so we do have then 6 months.
do.
Okay, all right,
We do,
okay.
yeah. Actually, if you look right there next to where it says operating and cash flow, right to the right of it, designated for 3 months of.
Yeah, I
operating
saw that.
expenses,
Mhm.
And then cash flow is also designated for 3 months. So between the two, it's 6 months.
Okay.
Each one of them has a 3-month target.
And why do we call that cash flow when really our general fund is cash flow?
It's cash flow because that's where the excess monies go. That's
Oh,
where the
okay.
excess funds go. And we use that because of, sometimes we need to expend more or less. And we try to also keep as much in the LAIF account as possible and keep the US Bank account as small as possible, keep the balance as small as possible because of the FDIC insurance, even though it's collateralized. So we do try to keep those balances where they are the most safe and where they will earn the most interest. But that cash flow is basically the catch-all where all this activity builds up until we can make these transfers.
So when revenue flows into the district, the money goes into that cash flow
Into the US Bank first,
to US Bank first.
into the US Bank.
And then you get it out of there as soon as possible because
Yes.
it's not insured.
Right.
Um,
Only up to 250,000. And then we transfer that into LAIF. And in LAIF, it sits in the cash flow reserve until we need it for.
That question, I know that.
There's a lot of back and forth, we transfer between our general fund in US Bank and LAIF, maybe like 3-4 times a month. Yeah. So, we're adjusting as we need cash to write checks and as we have cash coming in. In fact, we just got a large payment from the county for our property taxes and assessments. So that came into our US Bank account, but it was a large payment. So we wanted to get that up to LAIF as quickly as possible.
Vice President, I interrupted you. Do you have more?
No, that was all from me. Thank you.
Okay. Director Fick?
My eyes are properly glazed over on that. So I don't have questions.
My apologies.
Director Jarlsberg?
Well, this is probably another stupid question. I'm a little confused as to what the 23-24 rate study funding. Could you explain that a little more?
Yeah.
What amount is?
The rate study has, if we look at the the schedule in the rate study, and Vice President Doolittle actually had that at the Finance Committee meeting. It shows the breakdown of expenses, of revenues and expenses that the district has budgeted and projected. And within those expenses, we have projected that we need to set aside 2 million for capital costs, 185,000 for meter replacement, 375,000 for equipment and technology replacement, which includes not just the regular fleet, but also as it ages and depreciates and needs to be replaced, but also the CIRP fleet as well, which is going to be coming up on 10 years old here in just a few years. So that is, and the Studies and Reports Replacement Fund as well is designated by the rate study to receive $200,000 set aside into that reserve. And this is all dependent on the revenues and expenses coming in, actually meeting those targets, meeting our budgets. And we did do that, so we're able to fund those reserves and set that money aside. But at the same time, we're setting aside more money, we're using it. And so that's what we're doing in column 3 is we're using funds from those reserves, but we're also replacing it with new funding in column 4.
Am I remembering incorrectly? Weren't there a couple of different standards for the rates that we decided on one, and then there was another one if
There
we
were 3.
decided, yeah, if we decided that we needed it?
Right.
I mean, has that changed? I mean,
No, we're still using scenario C, which is what the board wanted to implement. This is the funding that was designated by that scenario of the rate study.
okay, so we don't need to go to the other level that was our kind of backup if we needed it.
Right, right. I actually will have a report next month about that, an analysis on the rate study scenarios. And so we'll talk about that in more depth, but no, I think we're fine. We're on track right now with where we are with rate scenario C.
Yeah.
Yeah, and this is exactly what that scenario designated to go into those reserves.
Yeah, okay.
But keep in mind, we haven't implemented anything for chromium still, so.
Right.
That's still
Yeah.
TBD, and there's no stupid questions. I'm glad you asked the question.
Absolutely.
Thank you.
Thank you.
Dr. Short.
I can't believe it's already been a year. No questions.
So there's potential for investing this emergency capital replacement fund, which is 2,395,000 and change. And we're going to earn interest on it in a separate place. And so this amount here is board designated, as I understand it, the amount of
Yes.
this reserve. So this additional interest, where would it go? It wouldn't go into this account because we have a limit, board designated amount.
Right. In this case, because it's a designated account, it will go into the general interest earnings with the LAIF earnings. So those will be together. However, the wastewater capacity fund, because it's a legally restricted fund, the interest earnings have to stay with it.
Oh, interesting.
Then that's fun.
Yeah.
What fund did you say the interest would go into? The first thing?
The general interest that the district earns, so anything that we earn from LAIF, anything that we earn, the small amount that we earn from US Bank, and anything that we earn from camp will go into that general interest account.
General interest.
Sorry, that's a general ledger account. It's not it will go into, ultimately, it will go into the cash flow account that's on your schedule here. And then that's where, like I said, all the
The bottom.
yeah,
Okay.
that's where the excess funds are until they go to their designated place. So, again, here we have to keep those funding levels in the proper level with all of these various individual replacement reserves. And so, that's what we're doing now, is trying to adjust all of those reserves to their appropriate funding level and to also reimburse them for what was spent over the year.
Are you entertaining a motion? Are you ready?
I was gonna ask,
okay.
David from the Citizens Advisory Council, he's the chair. Do you have a comment on any of this stuff?
I say, let's do it.
Any other public comment? Hearing none. Is there a motion from the board to approve 23-24 reserve transfers as indicated in the earlier presented staff report?
Can I make that motion?
I'll second.
General Manager, roll call.
President Cohen,
Aye.
Vice President Doolittle,
Aye.
Director Fick,
Yes.
Director Jarlsberg,
Yes.
Director Short.
Yes.
You.
Thank you very much. Motion carried. What's and comments, for informational purposes only on subjects not covered by the agenda, the opinions of individual directors are not necessarily the opinions of the board or direct district staff, sorry.
Mhm.
No action will be taken. The board may provide staff with requests for future agenda items. President Doolittle.
Yes, I just wanted to share a couple of meetings that I attended. One was the MWA board meeting last week, and that it started with the MWA master plan workshop via consultant's report. And in that, I saw that they're now using service area division numbers instead of just the sub areas like SD and stuff. And we are in Region 3. Something that was shared in this meeting is that they predict a 50% growth in the service area, the population, in the next 40 years, with 20% more water needed, 25,000 more acre feet than they have. They discussed handling reduced water supplies, delivery in the future with other factors such as basin health. In the past 20 years, allocations have averaged 41% since 2014. They're developing a decision report tool on who gets what, when, and where. Then they went on to the regional urban water management plan, and that allows more conversations between water districts like ourselves and MWA, and 10 agencies are involved in that, and we're one of them, right? And there was a recent meeting, I understand. And we will have to contribute content, which I suppose will be our urban water management plan, which is due in 2026. It looks like, yeah. I just wondered though, if we should be considering buying future amounts of water via this planning. Are we having to buy into the fewer amounts of water in the future via this planning document? I mean, are we going to have to say, okay, we understand we're only going to get this allocation and stuff? I don't know. Yeah. Yeah. And then then they had an audit report, and they updated their sunshine ordinance and something more on remote attendance. And anyway, so there's that. And then I also attended Monday night, a meeting, ASD, CSD, I always get it wrong. And Adnan, their general manager for MWA, was supposed to speak, but he wasn't able to do it. And so they had a relatively new hydrologist on staff named Wes Massol, Massoll, speak. And he introduced himself, which was nice. And he ended up talking about the state water project, and which I thought I know something about, but boy, I learned a lot about it. And, it's just, he called it the state water project is a critical pillar sustaining the 5th largest economy in the world. And it contributes $400 billion to this economy. He says there's going to be lots more variability in allocations due to availability. He said that in 2002, water was being traded on the state water project for $2,000 an acre foot. He says that the models indicate a 14 to 22% decline in water supply due to climate change. He also mentioned that there's a 72% chance of a seismic event in the next 30 years that would cut off Delta supplies to Southern California. This makes me wonder if we can buy more water now and bank it. It was just a thought, So anyway, and they say, so that he was very pro Delta conveyance project, and he said that the current estimate for the cost of that is $20.1 billion. And that MWA will have to pay 2.5% of this cost, as that's its allocation percentage. And anyway, so just, yeah, that was pretty much it. That's all for me.
Thank you. Director Fick.
What's 2% of 2 billion?
No,
Yeah, a lot.
no,
Let's see.
200 million.
I have to
Right?
take my shoes off.
I don't think I've been to any meetings lately, but newsworthy wise, we had on the horizon this Cadiz situation, and it's gone topsy-turvy because they're now going into splitting water into hydrogen and sending it someplace. It's a weird scheme. I don't know what's going on. And anyway, there's a long story about it from the LA Times, Sammy Ross.
Last week, for energy use, the hydrogen for energy use.
Yeah.
To clarify that.
So, and then, like I said, I have been to too many meetings that I remember right now. This meeting, I think this is a rather historic because I know I shook up the general manager and director, and because this entire pool situation out of the blue. And after investigation, we went for it. And eventually I envision us having a split on the Leif. We keep Leif because she's already got all the training on Leif for 17 years.
I guess it's hard to establish those accounts as well.
Yeah, but eventually I would see us using 2 investment pools eventually, besides Leif. So that's about it for me.
Director Jarlsberg.
Yeah, I did attend a meeting, the ASBCSD dinner in Victorville. A nice little drive, and actually carpooled with Director Doolittle, which was useful because we haven't had a chance to talk for a while. And I really appreciate all the notes she took because I didn't. But I thought the information that this young fellow gave was very informative, and kind of future broadcasting too, something to look out for. So, and I'm not sure if what he presented would be a useful PowerPoint if it's available. I was thinking about trying to see if it's available and maybe send it here if you wanted to distribute it. But I'll look into that a little bit. What a comment I have is that I would like to see the page numbers of the attachments on the agenda so that when we're looking at an item on the agenda, we know where we need to look. And because sometimes you start talking about it before we're actually at that page. And it would give us heads up. I've had other agendas, other boards where.
The handouts that I gave.
Yeah, just have, where the pages that we're gonna look at for the various items on the agenda.
Yeah, because they were items that just weren't on the agenda, but yeah.
Oh, really?
Yeah, those were.
They were added after the
Yeah,
agenda, is that what you're saying?
Additional items.
Oh, all right. Well, maybe eventually if it's possible.
Yeah.
Just a suggestion, again. And the other thing I wanted to say is that I will be attending the JPIA meetings on December 2nd and part of December 3rd, and the ACWA conference for 2.5 days in the first week. You gonna be there? Is that why you're nodding? Okay, I'll see you there. And I'm looking forward to it. There's a very interesting agenda. So I'm hoping to come back with more stuff to talk about. So thank you.
Director Short.
I didn't attend any meetings. I did want to just congratulate the staff on the results of the audit, as well as all the work they put in on the presentation on the investment pools as well. I appreciate how much work y'all put into that, and I'm excited to see the results.
Nothing exciting from me. Hopefully we'll have more. Or I'll have more next month. Obviously, I've been at the farmer's market every Saturday. Sometimes there's excitement there and sometimes there's not, but we try to stay out of it. Anyway, general manager's report.
All right, I won't keep everyone too long. I will say that we have municipal diving on site this week. They inspected our very large CTB reservoir. I always find that pretty fascinating. It's a job where they come in and they dive the tanks to look for any issues. They'll be back in January to inspect C1, C3, and B1 tanks. We also are scheduling with Edison and Grundfos to get our D11 booster station up and running, hopefully in December. So that's exciting too. It's been a long project, so it'd be nice to have that one wrapped up. On the 12th of November, CAC meeting was canceled due to lack of quorum. But we do have some new applicants that we'll be bringing to the board. So hopefully that'll help solve that issue in the future. And I also just wanted to say thank you to Dave Carrillo. It's been a very essential CAC member and very diligent in being at every meeting and being at the board meeting, and your support is really appreciated.
He was also at the market last Saturday for quite a while, which I appreciate.
Also, I wanted to do a special thank you as well to staff, to especially Anne and Autumn, in regards to the audit. I know how much time and effort that takes. It's so hard to have something that takes 10 months and then we review it. And also thank you to each of our directors. You all took the time to read it and have good valid questions about it. It's hard to have something that takes 10 months and then within 1 hour. So, that's the role of the admin role, but thank you very much. It's so amazing to see a clean audit, which I fully expected, but just like to see it on paper. And the tons and tons of meetings, but one that was notable was Christian Kermago, who is a ratepayer here in the district, allowed President Flowen and I to tour his property, and he grows olive trees. And we got to learn all about his sustainable practices.
Right.
And it was very eye-opening and enlightening. And he invites other people. So if you are ever interested, President Flowen has the contact. And it's definitely worth, I think, something that Vice President Doolittle would really enjoy as well. He's done a lot of work using engineers to design swells and composting hills to keep the berms.
Yeah, the guy who did the permaculture on my site, Tim Delory, worked with him.
Oh,
Tim.
yeah.
Oh,
So it was fascinating. It was freezing that day. We had a lot of wind, but fascinating tour. And I was really thankful that we got to do that. And that's the end of my report.
Thank you very much. Is there a motion to adjourn the meeting?
so moved?
Second?
I'll second.
Thank you very much. This meeting is adjourned at 7:45 p.m.
Have a good night. I'll see some of you at Aqua.
Bye, Jeff. Thank you.
That's what we're reaching for.